Ladies and gentlemen of the crypto space, we're live on a Tuesday, September 28th at 11:45 a.m. and we're going to hit the charts today. I'm not too into technicals. I'm into understanding what the technicals are telling me about the sentiment of a market. I'm not the best picker of entries, but I have my convictions and long-term time horizons, which overwhelmingly compensates for a potential shitty entry into a position. Now, the markets are telling us that there's extreme fear in the markets. And I don't need a little fear indicator, a fear greed indicator to tell me anything like that. You're going to see it right in the charts. Okay, even in the crypto charts, but especially in the legacy financial charts. So without further ado, let's pop over to the main screen and see who's in the stream. So this is the S&P, this is ES, this is the S&P futures market. We haven't seen a bearish day like this in quite a while. We haven't touched on the 100 SMA in the daily since November of 2020, which is, almost a year, 10, 11 months. 11 months, damn. 10 months. Okay. Still, point being, this type of market activity, the sentiment of people in the markets must be on edge. A breach of the 100 SMA to the downside will likely, over a period of time, send us to the 200 EMA and the 200 SMA further to the downside, which is another 230-point drop. Now, if you go out to the weekly, it's even further, and you get the 50 SMA on the weekly. You get a 10% drop in the market from the highs, more or less, or at least from this price action region over here. These three candles on the weekly, the last 3 weeks, be about a 10% drop to the downside. Now, 10% drop to the downside in legacy markets is going to send crypto markets into a tantrum. People have no idea what to do because the participants, you have to think from the perspective of the average participant, they have no idea what they're doing. They're afraid because they take $10, and they put it into an asset that's worth $10, and the value of that asset is going down, so they think they're losing money. It's a complete misperception of the nature of their activity. What are they doing? Why are they doing it? They see dollar go down, and it's short-sighted at best, and dangerous to enter markets with that type of perspective. At worst, which is exactly what the vast majority do. It's going to be an absolute bloodbath with those meme stocks, which will, go vertically downward. And there's a potential for even the broad indexes to have such activity given the prevailing market participants, even in the broad indexes, which is outside the scope of memeage, so on and so forth, which the general public really hit on hard the last year. But the more advanced general public players probably hit on real stocks rather than just bullshit. And that'll be represented, reflected, visually observable in the broad index of choice, which I often look at the S&P. You could also look at QQQ, see what's going on in NASDAQ. So obviously the tech sector is still extremely strong, still above the guppies on the weekly, below the guppies on the daily. Also, just like with the S&P, all the markets pretty much move in a similar way, hitting up the 100 SMA on the daily. I mean, that's a lower low, by the way. So tech is very heavy. It has moved up much more than the broad market. That prints a lower low, and if you look back here on ES, it's not a lower low from the other day's low. And go back to QQQ, that's a lower low. From a technical standpoint, lower low, that's not good. So this market looks like crap today. This is horrible. And it's going to provide a lot of discounts on productive assets. Now, these aren't productive assets. QQQ yields nothing. It's worthless. And the S&P yields nothing. It's worthless. So people buy them just merely speculating that they're going to go up and down in value. They're going to have capital gains because they're going to sell it for dollars. And what are you going to do with those dollars? It's profit. Maybe you reinvest it, so on and so forth, but they're securities, so they follow securities rules. So this gets into a whole complexity that I like to think about in great detail with what kind of assets are we playing with? Are we playing with securities? Are we playing with commodities? Are we playing with REITs, dividend-bearing instruments? Are we playing with crypto assets, which are not necessarily any of those things? They fall into a what the fuck are they kind of area. Let me hit some comments, then we'll look at some crypto charts. Living amongst them, good morning. Steady as she goes. Professor J, good morning. Daniel, the man, the myth, the legend. Well, I look at things differently. I don't know about those big, adjectives, but I like them. Thank you. Latest, good morning. You're awesome. Discovered you a month ago. Yeah, well, I look at things differently, and that brings me a great deal of comfort, and especially the fact that I'm not doing these, they're not engaging with these markets the way the average participant does. Heirloom, a pleasure. Beazle Irish, good morning. Crypto Bets, good morning. Foo Bear, yes, sir. Been binging Noah vids for 2 days straight. I got so many damn YouTube videos at this point, and I got the new, Ask vid. I don't know why it's showing like that. Let's go back. I got 2 videos up on AskVid at this point. That's very nice. Couple of questions. I don't really have a way to respond to them. But Lewis and a couple of other folks have asked me questions. I'm not going to respond to them right now, or maybe I will. Thanks, Noah. Thanks for a nice intro. You always look forward to hearing YouTube channel, but type of tutorials are also very useful. Yeah, I'm trying to do some different content with the AskVids. Why did you choose MIM? Well, MIM's a stablecoin. Frax is very interesting to me. A lot of people have distaste for it, but I think anything other than DAI, USDC, and USDT is going to be increasingly meaningful in the coming months as regulation tries to take control of the market. I like GUSD, dollar back, but if the Treasury forces registration of stablecoins, they're going to have to turn their dollars into bonds. Gemini will probably have the easiest process to traverse to get to that because they have dollars, they could just buy bonds. The problem is bond dollar valuations fluctuate, so that has an issue with collateralization and maintaining the stablecoin peg. I don't understand why dollar stablecoins can't be backed by dollars, in which case GUSD is in the best position to achieve that. Preference going into summer. I opt for the digital stablecoins. I don't want anything to do with the legacy financial system. I don't want anything with dollar. I don't want anything that has a dollar backing. My interest is in MIM. My interest is in Frax. My interest is I don't have any UST or Terra, but I'm interested in seeing how that plays out, especially during a very strong deflationary impulse. And I'm interested in what Andre's doing, especially on Phantom. I think there's some significant things to come in the coming years. I think in terms of years, boys and girls, definitely not in days and probably not even in weeks at this time. Lewis mentioned MIG, which is Magic Internet Gold, which is something Daniel and crew from Abracadabra are working on. At least that's what I've heard in brief. And that sounds cool, albeit it's pegged to gold. I'm more interested in the concept of something being pegged to a fixed unit of account, a fixed value, a numerical value, the number 1. So I don't think stable coins are really understood for what they are. They're pegged to $1. What does that mean? I think the concept of pegged to a fixed value, a unit of account, the number 1 is meaningful. That doesn't necessarily mean it's pegged to $1. So there's some interesting thought experiments and trips down psychology lane to really understand what does this all mean. We all think of the way we used to that we live outside of the crypto space, and we think that's everything. But to really be innovative, you have to think different. And I think there's some very abstract concepts that some of these teams are really thinking about. And I don't want a dollar pegged stablecoin. I want a stablecoin pegged to a fixed unit of account. So what does that even mean? So these are some interesting questions, and I get a kick out of thinking about it. Alex, pleasure. Crypto beds. How can I take a salary from my XBOO position weekly? So you're going to have to withdraw some BOO from XBOO. and that's how you do it. And then you sell for something. So what are you selling for? Are you selling for dollars, like a stable coin that has a fiat on and off ramp, and then you could take those to a bank account and you could pay for bills. You have to think about what you do with your capital much more granularly. Most people don't really have a plan, don't really know what they're doing. Are you compounding? Well, Expo automatically compounds. Well, that's awesome. That's a very powerful position, and I am able to achieve that effect with SPEL very nicely, and a variety of other positions. But Expo is an interesting asset that I wish I had a position in. I don't necessarily want to take a position in the short term, but I think in the coming years it will do quite well. I think Phantom will go multiples over the coming years. Why wouldn't the ecosystem just continue to grow, giving its functionality, what it offers, and that's cool. So, as I say, I don't necessarily own everything I want to own, and Expo is one of those assets. It's a great asset. If the transaction volume speculatively on the Phantom platform continues to grow over the coming years, Expo is going to capture a significant revenue stream from that transaction volume. Pretty simple. Pretty simple. Mike Pye made it. Chris Haas swapped USDC, bridged to Ethereum, moved to Coinbase, convert to USD, moved to bank account. Yeah, pretty much. Gemini is probably the most heavily regulated centralized actor in the crypto space, at least anecdotally, or that maybe that's my opinion, but at least that's the sentiment that I get. So GUSD is a wonderful fiat on and off ramp. You convert to GUSD, you send it to Gemini, and you basically have dollars in seconds. You're able to sell the GUSD for dollars and withdraw to a bank account with an ACH, and you sometimes get it the same day, if not one day later. Usually 2 days for an ACH, but things have been operating pretty fast with regard to ACHs in the last years since the pandemic hit. Dystopian chart looks good. I don't know which chart. We'll take a look at a couple of different charts in a second. Assume you're in the U.S. Yes, I am. Gemini in the U.S. for me. Daniel, any remote hours soon? Yeah, I'm going to try my best. If anything, they're in the evenings, like 6, 7, 8 o'clock, maybe even later, 9, 10 o'clock at night, Eastern time. And that's food for thought. I know everyone's around the world. We people listen from everywhere with massive time zone differences, and I wish I could be on for everyone. Obviously, with the new Ask Vids, it's more asynchronous content, whereas this folks need to be on. I'll be at the YouTube recordings are asynchronous in that regard, but I would like to help more people one-on-one if I can, and I'll try my best to do more remote hours. I wish I could do more. I always say that. Farming with MIM on Phantom. I got a MIM position on Phantom. Let's see what it looks like today. Oh no, I don't have a MIM position on Phantom. I have a MIM position on Arbitrum. We'll take a look at that real quick and see how it's doing. Beazle Irish, have you bridged from Polygon to Arbitrum via swap yet? I was thinking of sending over and continue to farm Ethereum on GMX. There's plenty of places on all these platforms, my friend. You can bridge from Polygon to Phantom to Avalanche to Arbitrum back to Ethereum, and it's just opportunity overload, in my opinion, which is an interesting thing that you hear me say on a day when this thing is approaching the 100 SMA pretty quickly. For 12 noon, that pushes down, and we have a previous support flip resistance. There's going to be a lot of fear in the markets because this thing has a long way to go down. That's a heck of a chart. I mean, this is 2021, just straight up. We've had no mean regressions in 2021 on the weekly at all. So this thing could go down 10, 20, 30% and still be a bullish chart. The general public and legacy financial market actors are not prepared for activity like that, but we are in the crypto space. So the question really becomes, how do we handle that? And I want to talk about that. I want to look over the charts, as I keep saying, but I also want to talk about how I'm thinking about a massive correction and a crash. Because I'm prepared to lose 50, 60, 70% of my portfolio's the dollar denominated value. And I have activities and choices and behaviors that I will do as the market performs as such. Joe, the XBOO can. Oop, where'd it go? Sorry. The XBOO can be staked for DAI. You can use the DAI yield to pay yourself. That's right. There is DAI incentivized returns on Spooky Swap, amongst other things. Crypto Bats, you're welcome. Mike Pye, S Spell, yep. Diesel Irish, that'd be pretty cool. Trevor Van Meter, my man. Foo Bear, are you familiar with Mark's book, The Tao of Capital and Talib's Anti-Fragility? There's nothing interesting that comes out of his mouth, in my opinion. Um, Small wins and losses to stay positioned for continuation. Yeah, I'm not a fan of small wins and losses. I don't take wins. I don't take gains. I want to avoid capital gains at all costs. What I want is revenue streams. So I think entirely in terms of a business model, and the more revenue streams, the better. It's as simple as that. And they're compounding. They're generating revenue. You're able to accumulate a treasury. You're able to deploy the treasury at opportune times. So let's take a look at that real quick. So I have some capital on Abracadabra that I've accumulated, about $24,000, give or take. It's cranking out 32% returns, denominated in Spell, a couple of bucks. It's relatively small. But over the course of a couple of months, that's going to accumulate very nicely. And I obviously have this cash position sitting around, and I expect to have some more cash as Convex just cranks out cash. And I'm going to accumulate that in dollars in this type of market, stable coins. And if the market takes a fat hit, I'm going to be a buyer of productive assets. Considering the bearishness of legacy financials, it's nice to see price action like this. This could be a bottom, and that's a nice candle if that's a bottom in about 4 hours. If that starts moving up, you see what happens when you have these types of wicks to the downside. Albeit it has been printing lower highs and lower lows. Um, you know, you save some of your you save some of your capital if it hits the lower boxes. And what I've highlighted here with the purple rectangles is regions of price action congestion, and that's likely where people with capital, dry powder, so to speak, jump into the market. I don't think we're getting back down to this purple box, but you always want to have some sort of capital to deploy. So that's the point of the revenue streams. The revenue streams are generating capital. You accumulate the capital, maybe you pay bills with them, but you also want to have savings such that you could buy things. And that's exactly the type of mentality that I'm thinking of going into potentially a short term bearish market. Folks can be bullish or bearish, and you see the perma bulls regarding Bitcoin. The cycle isn't over. I don't like to think in terms of cycles. I like to think in terms of today. What is the market doing today? And the market tells me there's a shitload of fear, which means I'm prepared and expecting for prices to go down, which means as I accumulate more cash, as cash comes in from yield bearing positions, I probably have a couple thousand. I got a couple thousand here. So I can move that over to Arbitrum and store that in my Curve MIM position, which generates probably 50 something percent between transaction swap fees and the incentivized returns. And then as the market continues to decline and hit these various price action regions of congestion, I'm able to accumulate more interest bearing assets, revenue generating assets. The reason I haven't been talking about accumulating more CVX CRV is because I have a target position size that I want. I don't really want to get more than this right now, unless like a smaller asset, like if SPL goes 10x. I'd have to think about the structure and the balance of the portfolio a little bit more. But as of right now, I don't really think my portfolio warrants a greater size position in CVX CRV. That's just my sentiment at the moment. Oop, I'm trying to scroll up, get it. Oh, a lot of comments. I'm going to keep up the best I can. Suspending the interest does incur a capital gains tax. Of course it does, especially if you're buying and selling. And it depends. Everything is gray area with regard to tax treatment. In my opinion, I think we're able to model this as a business where revenue generating assets, do they fit the criteria of a security? Do they fit the criteria of uh, of a commodity? So what kind of rules are applied to the assets we're playing with? And they really haven't defined the rules. So it's a very gray area of how to treat these assets. There's no reason these aren't assets that are comparable to assets that a business might have in their treasury because they're not defined as REITs. These aren't companies producing dividends. There's no promise of returns. We're capturing transaction fees. So it's kind of like we have partial ownership of a company, but it's not, doesn't fit. It isn't the legacy financial system. And that's what's so frustrating about the topics of conversation. They're trying to apply legacy rules to assets that literally are brand new. These were just created and they're not on Fidelity. They're not on Schwab. They're not on the stock market. So what the fuck are they? So everyone tries to jam these brand new assets into legacy rules, and I find it so goddamn annoying. As you guys see, I think very differently about these markets, very differently about these assets. So why the hell would old rules apply to brand new assets? Let these boys at the IRS and Congress and the SEC and the CFTC figure out the rules for new assets instead of maybe they want to apply old rules, but they haven't said what kind of rules they want to apply. Literally, all we have is Q and A's. Bunch of schmucks. Um, Fubear butchered the question. Attempt to keep it brief. Too complex a topic to broach through text. Well, let me see if I could read for a second and help you out. Position for outsides down moves, at which time you're cash rich. When markets are on their multi-year decade low, so you can buy them. Yeah, when markets go down, you have accumulated cash, which allows you to buy the dip. Now, the question becomes, when's bottom? I have no idea when bottom is. Bottom from an S&P perspective can be very, very far down. And bottom from a spell perspective is probably down here in the bottom purple box. Hopefully we find support at the 100 SMA, which is nicely in the second purple box to the downside. Curve, let's take a look at this real quick. You know, I hope in 7 hours it gets back above the 200 SMA because this is a 50 SMA, 200 SMA convergence, which is a golden cross on the daily. If this pushes back up and we have a nice wick to the downside, this will turn into a relatively good looking chart. Curve is extremely volatile, particularly because it has such a large quantity of assets in circulation. We all know it's a decaying hyperinflationary currency. There's a lot of them. And that doesn't mean it's necessarily going to go up only, but what it's going to do is be extremely volatile. And that's exactly what we've seen historically. But the averages of the volatility look to be bullish. That's a heck of a bullish convergence if that helps. I hope that helps, Fubear. Let me try and keep up with the comments. Is there any point would you take out portions of your assets? Would you hold through this? I don't have time to manage my assets, and I want to think different because it's not hodling. Hodling makes no sense. You buy an asset that you're attached to, that you love. It does nothing for you. It doesn't pay you. It doesn't give you salary. It does nothing. And then, 2 years, 3 years, 4 years later, it goes up 10x. You're going to sell an asset that you just held for 4 years for dollars? That's so silly. Is that not the silliest thing you've heard? Obviously, as I iterated, and it probably makes sense if someone else said it, but like pick an asset that's old, like XRP, produces no yield. It could potentially go up 10x, 20x, 30x. Imagine an SEC settlement and all the positive news in the world. You're going to watch it go to $100 and you're going to sell it? An asset that you just held on to for all that time for stupid dollars? That's why I can't do I can't behave like that. I need assets that I have no interest in selling, that are productive assets, that are basically like owning a business. They pay me. It's a different way to look at the markets. Crypto Henry, is it true that MIM holders get spell airdrops only on Ethereum? Well, MIM are dollar stablecoins. There are no airdrops for stables, my friend. Barrett, what is your opinion on the best use for Bitcoin that I don't want to sell? Collateralization, and you're able to borrow against it. So you're able to turn your Bitcoin into productive assets, or release the equity in the Bitcoin into productive assets. Albeit Bitcoin itself is not a very productive asset, but the equity in it can be. Um, Obviously, there's risk associated with collateralizing an asset, especially with regard to volatile assets, because you can encounter potential liquidation depending on how much leverage you put on to a position, how much debt you take out. So even from a collateralization standpoint, it's still not the most productive asset because you got to over collateralize significantly to minimize the chance of liquidations. Dirty Sanchez, hey Noah, glad to see you doing well. You always make a point about concentrated bets. Would you say the same? L1, L2, three different. Well, I don't see any opportunity right now for concentrated bets. You know, concentrated bets are only taken with regard to a very specific trend setup. If you have an ascending triangle or a bullish pennant, which is like a sim triangle on the top of a flag, or a bullish flag. So you have to really understand technicals in order to take a risk-on bet. Now, technically, this is extremely bullish, but you would wait for a breakout, a retest, and then a higher high. $4. If you had patience, a $4 um, entry after a trifecta, a bullish trifecta confirmation, that's a good place. But that takes a lot of patience. You got to wait for the right trend setup. This is this is probably the most awesome trend formation I could think of right now in both legacy finance and the crypto space. This is just a massive, massive symmetrical compression for the entire lifespan of the curve asset. That's just extraordinary. Um, Jake, thoughts on Toke? Not an opinion currently. That does not discount any of its potential merits. Could you possibly address strategies for timing and cost of claiming rewards? Well, you have to. I don't have a particular strategy. You get yield, and now you question what you want to do with your yield. 106, 214 Gwei right now for a high priority transaction. You're talking about $200, $300 to take your yield from a convex position and convert it to another denomination of your choice. That's probably going to be a factor in people's how often they claim. It's going to cost you $200, $300, $400 to convert your yield into something else. So that's your choice. Timing, that's your revenue. At the end of the week, do you get a paycheck? At the end of the week, I get a paycheck, and I choose what I want to do with it. But I have considerations. If that paycheck is going to cost me $400 to turn into dollars to transfer to a bank account, I might not want to do that. And that's how you think about it. You have to think of the consequences of your actions. Hey, Ethereum spell cranking out 127%. That's pretty cool. Reinvesting, compounding. I don't have perfect answers for you living amongst them. Um, Compounding is a personal choice. Reinvesting is a personal choice. Taking a salary is a personal choice. And what you do with your capital is ultimately subjective always. And there's no prescription for how to do any of this shit. But what I like to talk about isn't prescription. What I like to talk about is just thinking different and attacking these markets like most people don't. The last thing you're doing is hodling when an asset is cranking out 60% yield for you. That's not hodling. You own a part of a business, you own a revenue stream. That's the difference. That's the way I think. Chris Haas, no, in the MIM pool on Arbitrum shows a base APY of 23%. Nothing shows on the rewards. Where do you see the 20% curve that you mentioned yesterday? So if you go to Arbitrum curve, let me swap networks. Arbitrum factory pool 23%, but then you go over to Abracadabra and you go to the farm page. Oop. Yeah, they're throwing around another 33%. So 22% plus 33% is 55% returns on MIM 2 curve, which is MIM 2 curve, which is USDC, USDT, and MIM. So you're getting 55% on stablecoins. That's pretty cool. And there's no curve, I don't think. I don't think there's any incentivized returns. Let's go back. As you said, there's no APY, so there's no curve on that, but you're going to get Spell. Spell's throwing around 33% on that liquidity position. Pretty cool. Fubear, a pleasure. Professor J, to be clear, would one receive LP tokens from Curve for providing liquidity? Then could I farm those same LPs on Abracadabra and get the rewards from both platforms? Well, you're not going to get Curve for on Arbitrum for MIM, USDC, USDT. You're going to get a base APY, and then you're going to get Spell as incentivized returns. Let's go back to home on Curve. So if you go for stable coins on Arbitrum, you get 21% incentivized returns on TriCrypto. So you're going to have exposure to Bitcoin, Ethereum, and Tether. Or if you go for Tether and USDC, you're going to get 8.5% incentivized returns denominated in Curve. Or you could go just pure BTC, WBTC in a REM BTC position that gives you 10% return on your money, annualized, of course. There's plenty of ways to generate Curve from stablecoins, and I would argue the most lucrative place is Convex. I wouldn't necessarily look at fixed forex. It's a little too early, but you're going to get a fair amount of yield on Curve itself. And if you go down to higher stable coins, you're MIM 24%. This is probably what I'd opt for. So it's a MIM 3 pool position, cranking out about 25% returns. And you can see the details. 30.34% base APY, 9% denominated in CRV, 10% denominated in CVX, and a 10% Spell incentive to boot. Fair amount on Frax as well, 20.17%, which is nothing to sneeze at. I mean, look at the millions, $870 million in the MIM 3 pool position, 381 in Frax, USDN, half a billion dollars. Incredible. Lots of cash getting thrown around in the crypto space, and it's cash, but it's productive because people are doing transaction fees or triggering the transaction fees, which we're capitalizing on, to a higher percentage rate of return than what a bank offers, one. And two, you got the monetary policies of Curve, and you got the monetary policy of Convex, which are used to incentivize the positions. Curve's incentives are going to last for years. So there's some interesting dynamics to the way things are going to play out with regard to, what folks speculate the longevity of the Curve monetary policy or the Curve incentives to be. I expect them to last much longer than people think. I expect these pools to dilute, more capital to flow in, which would be less returns, but I expect the Curve price to appreciate. So I think people are being surprised on how long 20, 30, 40, 50, 60% returns on your money are going to last. Yes, Marwan, good point. XRP, you say it you say it with certainty. XRP will not generate returns with Flare. XRP will be collateralizable with Flare. So equity can be accessed. So XRP by definition is stagnant equity. Right now it does nothing. But it has billions of dollars worth of value in it. So if you could take those assets and collateralize them on a platform so you could borrow against them to put that capital to work, to get working capital out of equity, that's quite meaningful. So XRP isn't an asset I would be interested in currently in any regard. It's not productive at all. But when it's collateralizable, it will change the nature of the market for the asset, much like Bitcoin. Bitcoin is not very productive at all. It has its macro narrative at all, but it's collateralizable, so equity can be accessed. So that's the way to think about such assets, such non-productive assets, but are collateralizable. Greg, thanks, Noah. Best school in this crazy space. Definitely is a crazy space. Last couple of questions. I'm going to wrap it up for today. Jake, let's have some fun. If you were forced to hold 50% of your portfolio in one of the three for the next 10 years, ew, God, no. I wouldn't. No. Jake said Zcash, ICP, or Ethereum Classic. My friend, none of them. I'm sorry. I'd rather go work at McDonald's than put my capital in those three specific assets. Trevor, my man, SPL feels like an early play, not cranking out a ton of yield. Okay, here's one interesting factoid. Mine Ethereum, yes. If you go over to stake, this is wrong. It's about 30%. This calculation will be adjusted when the new portal gets upgraded. So I've heard that from the devs directly. It's much higher than that. It's about 30%, give or take. Outside of leveraging with MIM, that's another story. There's plenty of plays, opportunity overload, as I always say. Professor J, you're very welcome. Mike Mitch, hey Noah, thanks for showing up daily. Question, I'm always wondering if you take on more risk if you have less capital to invest, since 20% yield doesn't exactly put bread on the table. So that's food for thought. And the amount, the size of a person's portfolio has a direct effect on one's choices. Now, I'm certainly not an advisor, I'm more of an educator, but uh, when you have a smaller portfolio, you're probably going to be encouraged to take on more risk. And that may or may not be a good thing. What I know is that savings works in the crypto space. So I I quite dislike the notion that crypto is make it rich or get rich quick. So if you have 20 grand and you're trying to make $2 million, the odds are against that. The odds are that's not going to happen. If you take 20 grand and try and make $30,000, it's a heck of a play also. That's a 50% rip to the upside with a 100% concentrated position. That's highly unlikely to happen. But if you take 20 grand and you take your paychecks every week and you're putting into a position that's generating 20% returns that are compounding on a yearly basis, you've actually reattained retirement potential. Whereas in 20, 30 years, when millennials are starting to retire, they're going to realize they're screwed. So you got to think a little bit bigger than just trying to be wealthy. There's some serious political and societal implications for what's going on, because you can't save for retirement with a bank account, and you can't do anything meaningful, in my opinion, in the legacy stock market, because folks aren't prepared how to manage the capital. Quite often, when folks make a lot of money, they lose it. My philosophy is you never spend the money you have, you spend the money you make. So you have to accumulate money to make money. Um, there's a lot of deep questions that very smart people are asking nowadays on the implications of these systems on society. 20% yield changes everything, which means you could save for a future. Whereas if you're not saving at 20%, you're saving at 0.02%, you have no future. Some deep, hard hitting statements, I know. So weigh your options and your choices. Take a calculated risk with 10, 20% of the portfolio. I always say 1% to 10% changes everything. That's how you change a portfolio. So you don't have to turn 20 grand into 30 grand. 20 grand into 22 grand is pretty cool. It's a 10% run on a 100% concentrated position. So technicals aren't easy. I would encourage everyone to try and understand them to the best of their abilities. And the most important thing is to not stop. I got to where I am by not stopping and being ferocious, and having my goals, my desires, and my conviction that I would figure out these markets. I certainly did not start in these markets with the ideology that I have currently. Anyway, I'm getting too deep and too philosophical. I hope it helps, though, guys. At this point, you have plenty of income. You are reaching a point where income is not what you want, but some way to store your value over the long term without constantly realizing income tax. That's true. Why not buy WBTC for long term to maximize long term after tax returns instead of your mint position? Because WBTC doesn't generate the returns I want. Whereas other assets I think are going to appreciate significantly over time, generate significantly more returns. I think there's too much opportunity cost with Bitcoin, in my opinion. I think other assets would do very well, and I don't subscribe to Bitcoin maximalism. I believe other assets are technology plays, just as Michael Saylor talks about, just as Raoul Pal talks about, and it's not going to be a one asset world, in my opinion. 60% on stables is peanuts 5 years from now. Not necessarily. If inflation's 10% and you get a 60% return on your stables, you're doing pretty damn good, my friend. But bear in mind, if inflation's 20, 30%, and you're only making 30% stables, I'm probably not going to have stables. I'm probably going to want to figure something else out, in which case opportunity cost would be present. Mike Pye, you're very welcome. Johnny Fur, keep it rolling. Dark Mark, are the same fees charged to deposit in pools as it does to withdraw your earnings? Yes, it depends on gas costs, though, at any given time for the particular market. Can you make any asset to a productive asset? No. Well, so I don't want to dig too deep. We're a little over on time, but LP positions aren't the constituent components. If you put USDC and WBTC into an LP position, you no longer have USDC or US or WBTC. You have an LP token, which has properties unto itself. And I think that's the best way to look at such positions. Dark Mark, 76 people in the stream, 25 likes. We can do better. I got to say that more. What do you think of DYDX? That is a Silicon Valley shit show. Aloha Noah, would love to learn how you organize your portfolio. Concentrated, 90% of the portfolio is about 6 assets currently. Maybe that helps in brevity. How long do you think you can make $1 million investing 50 a week in solid DeFi protocols? Why would you want to make $1 million? The goal is not $1 million. The goal is to make like $1,000 a week. That's your goal. So if you're accumulating stable coins or you're buying volatile assets, maybe a spell position, maybe a CVX CRV position, maybe an FXS position, or maybe just an LP position of some kind, you want your revenue to grow. You want your business revenue to go. You're looking at the principal valuations as a red herring, and it throws you off from what you really give a shit about. If you're making $1,000 a week with 100 grand, and the 100 grand turns into 50 grand, but you're making $1,000 a week at the 50 grand, do you really give a shit that your 100 grand turned into 50 grand? No, you're making $1,000 a week. What matters is how much money you're making on a weekly basis so you can actually pay bills and live your life. Charlie G's in the house. Hello, my friend. Last couple of questions. Which working assets do you feel also have a great chance to appreciate? The assets that I have in my portfolio. Robert Shaw made the live feed a pleasure. We can do better. Wu undervalued, in my opinion. First China narrative fits the China narrative. Not something I have an opinion on at the moment. Kinkai, is it better to buy CRV or CVX? Tough choices. I think CVX is for protocols and CVX CRV positions are for the general public. That's just my opinion. 12:30 p.m. on a Tuesday, September 28th. I thank everyone for joining. I hope it helps. We've covered a lot of topics today. Focus on recurring revenue streams. Try and think not like the average market actors. Be a little bit worried about the market conditions and be prepared because if the market dips, that's when you buy. You buy if the legacy market dips 10, 20, 30%, those are your buying opportunities. So what you need to do is take your recurring revenue streams and you have firepower. So save up your stable coins, save up your dollars in a bank account, and figure out how to take advantage of markets and how to acquire productive assets when people are fearing the markets. I hope it helps. I wish everyone a wonderful day. After party on Discord. More Ask Vids coming, and I will see you guys tomorrow. Peace.